Yo, what's up you guys, welcome back to another video. Today we are going to take a look at the market from both a technical and a fundamental perspective. So without any further ado, let's get straight into it. So we obviously know last week we had the NFP, first NFP of the year, and we saw that the unemployment rate actually was stable at 3.7%, although the Dow Jones's forecast of 3.8% was not met. So they obviously expected unemployment to increase, and one can understand why. But that's because we obviously saw the interest rate being kept stable at the December meeting as well. We've added more jobs, 216k versus the 173k that we had the previous month, so that was very good to see. And then the average hourly earnings was stable at 0.4%. The ISM services PMI was kept at, not kept at, but came through at 50.6 points over there as well. Now this is giving us some indication. Obviously it's good data for the index, and that means that the bullish outlook that we had in the previous video is now starting to make sense as well. Now going into the new week, we obviously know that we've got the most important details that we are waiting for, which is the CPI month over month, CPI year over year. And the CPI is an indicator used by investors to measure inflation, which by definition gives us an indication of whether or not the Feds are going to hike the interest rates as early as look, just keep it stable in comparison to where it is, but we will cover that when we get there next week Thursday. Now we obviously know that we've got a lot of news coming through there as well, but our main focus are going to be that on there as well. Let me just delete this. So we're going to start with the dollar index, and just remember that the index is negatively correlated with everything else that you see here below it, apart from the German 30, which is a euro index. So all of this, if this goes up, if this one goes up, you can expect all of them to go down, and if this goes down, you can expect all of them to go up as well. If you need more details on how that works, I've made a couple of videos on fundamental information. This analysis still stands, but we can obviously see here that we now came back actually to print what's known as an inverted head and shoulders pattern, which is considered a bullish pattern from a technical perspective. We had an equal high printed at the previous level of support that got broken, came back, tested it as resistance. From here, I definitely expect a continuation to the upside, purely based off the data that we received on Friday. And then from there, I would love to see one thing, and that one thing is maybe some some negative CPI, maybe inflation increasing, because that will even work more in our favor there as well. From here, definitely expect this market to continue higher, at least that structural level over there, lining up with a minus 272 there as well. Next up, we've got the NASDAQ. The NASDAQ, obviously we saw the market went exactly as anticipated. I still do expect some more move to the downside, but we can see over here the market printed an impulse. After an impulse, you expect a correction, taking the Fibonacci from the high to the low over here. We do have a 0.382 pullback that's lining up perfectly with this previous level of resistance that got broken, that is now acting as a level of support. Going into the new week, I would like to see a deeper correction, a pullback, and then a continuation to the downside, but we have to be reactive and not predictive. So from here, I would definitely see a pullback to the upside there as well. Next, on the Dow Jones, what we can see over here, this market still hasn't gone anywhere, filling the gap, but now in bearish territory as well. Now here we can see that the market broke above this level of resistance, tested it as support, broke below support, tested it as resistance as well. Like I said, I would still see this market to come down lower, to come and hit this level of support. And like I said before, in order for us to see a deeper clearance, this market needs to break above the structure. So once again, this analysis stands as well. I do expect this market now to pull back, because what we potentially have here is we got a head and shoulders pattern, and a head and shoulders pattern is considered a bearish pattern from a technical perspective. Next up, we do have the S&P 500. The S&P 500 went exactly as anticipated. We were waiting for that clear break below structure, and that is exactly what the market had given us. A clear daily close is the confirmation that we required. The market then went down, pulled back from here. Definitely can expect this meltdown to the downside, and we obviously have to wait for the price action to take place. And this is the kind of price action that I was referring to, that I'm waiting for on the Dow Jones to take place in order to confirm that massive move to the downside there as well. Next up, we've got gold. Now gold also is currently trading in bullish territory. Like I said, due to the negative correlation, in order to look for any trading positions on gold, we would need to get a clear break below the structure that it is currently trading at. From here, this market could easily go higher, but to complete the confirmation that we are looking at on the index, we need a clear break below this and then a pullback, and then on that definitely look for selling opportunities, because there is a negative correlation between the index and gold. So if we're looking for buys on gold, they can't be, if you're looking for buys on the index, we can't be looking for buys on gold as well, because they are negatively correlated as well. And then we got the German 30. Now the German 30 has now given us a clear break below structure. However, if we do look left, we are faced with new structure that the market had also printed over here. This level acted as resistance, broke above that, tested it as support. Here support got broken, as now acting as resistance. In a situation like this, I would probably tell you to sit on your hands. You wait for a clear break above this. This will give you confirmation that we once again will go higher. The clear break below this level will make sure that you bank the bank, because this is the next line of structure of support that you can come and expect the market to test there as well. Thank you for your time, and as always, cheers for the ears.